so in love with you.
Welcome back to Real Estate Mindset. You guys, with surging interest rates and with surging home prices, more and more buyers are starting to quit and step out of the housing market. Thank God, because that's exactly what we need. We need much less demand, much more inventory, and essentially right now, especially right now, we need the dust to settle. We need everything to calm down so that we can get back into a healthy housing market. So today what we're going to do is we're going to dig into a Redfin news article, which is absolutely bonkers, titled "Home Sales Fell 4% in March as Buying Costs Shoot Up." You guys, buyers can no longer afford to buy houses anymore. Home prices, as far as the mortgage payment, year over year has shot up 35%. So quite frankly, all of the fundamentals right now and that has been happening in the housing market are completely broken. And it is only a matter of time before it comes crashing down. And I want you guys to all mark my words on that. Now, it's always important for me to say I am not a financial advisor. I'm an opinion sharer, but I am a realtor in Houston and a loan officer in Texas. And if you can, real quick, like this video, subscribe to my channel, and comment. As always, I absolutely love our community. I found the comments in my comment section extremely helpful, most of them anyways. Now let's get started on this article right now. The hottest March on record ended with early signs of a cool down as more buyers were edged out by soaring mortgage rates, sky-high prices, and a few new listings. It was the hottest March ever for the housing market, with homes selling at the fastest pace and for more above listing price than any other March on record. The median home sales price rose 6.2% in March, the fastest month-over-month gain at this time of year since 2013, to an all-time high of 412,700. That is crazy, you guys. Seasonally adjusted home sales fell 4% as soaring mortgage rates and prices sidelined more buyers whose options were severely limited to a decline in homes being listed. Although pricey coastal markets began showing early signs of a slowdown in late March, nationwide sales data from the full month reflects the hottest March market on record since homes that sold last month mostly went under contract in February. We expect the combination of surging mortgage rates and record high home prices to cause more home buyers to drop out of the market. Unfortunately, home buyers are turning their back to the market too. Instead of being motivated to list before prices weaken, potential home sellers may be choosing to wait out the impending market cooldown. So you guys, it's really important to note that the cooldown really didn't start happening until the end of March. So that essentially means in January, February, and a lot of March, the housing market bubble just got bigger. The fear of missing out got stronger. Overbidding for houses, stronger. Houses being bid on immediately, stronger. All of those things go against practical fundamentals of our housing market and of equity growth. So all of those fundamentals broken. That's why I'm telling you guys, I don't think we're going to go into a cool down because the house prices just got too expensive too quickly. And as you're seeing, there are some sellers, they don't even want to sell because their interest rates are so low. People can't afford to have a 35% increase in mortgage payment and still buy houses. And here's the thing, you guys, mortgage rates are only going to go up from here on out. That's not to scare you. That's to give you hope. That means more demand will become less. And what we need is a market correction. We need homes, we need house values to go down to more practical levels, to more wage increases, right? We need equity to match wage increases, or no one's going to be able to purchase those homes except institutional investors, and we can't let that happen. Now let's continue reading the article right now. Now remember, you guys, people are going to be paying a higher interest rate on an average medium house price of over 412,000. That is astronomical. People can't afford this. I'm telling you, we were rug pulled, but we should have been rug pulled with those interest rates going up. I'm telling you guys, thank God we were rug pulled with those interest rates, and I hope they keep going up. Now here's the article. Everyone is watching mortgage rates right now. Buyers using traditional financing are worried about being priced out, but all cash buyers are rubbing their hands together, thinking that high rates will dry up the competition and they will be able to swoop in and bid unopposed. However, the biggest effect I'm seeing right now has been on investors. With prices rising so fast, the return on investment is falling fast. Higher monthly payments are starting to push Austin area investors into other less expensive markets or out of the market altogether. Now, you guys, this is really good news because a lot of people thought that investor demand, with the rates going up, that investor demand really didn't matter. But I've been saying that investor demand is also going to be crippled because of equity growth. Investors aren't going to invest in properties unless there's substantial equity growth. And a lot of times people aren't going to invest in rentals if they suspect a downturn in the market because they will lose money. So investors traditionally don't make money by making bad investments. So we're going to start seeing moving forward much less investor demand. And the reason why that's so important, you guys, is because the investors took such a big piece of the pie. Certain quarters, they took up to 25% of the homes on the housing market, which essentially means 1 out of every 4 homes went to an investor. Wrap your mind around that 1 second. Look at how hard it is in this current market for first-time home buyers to actually even own a home. There's so much competition. So the fact investor demand is down, thank God for that, you guys. High five to everyone out there. It's starting to happen. Follow with me along this channel, okay? I'm really looking forward to buying my own house and then showing you guys that entire process. But right now, it's still over toxic. Let's continue with this article right now. Now, take a look at this, you guys. This is a graph from Redfin. Seasonally adjusted homes for sale fell by 13%. Okay, so home sales are actually falling. And, I'm not too worried about that, guys. The reason I think they're falling, home sales are falling for 2 reasons. Number one, there's a lot of people, not all people, but a lot of people refinance into lower rates. And number two, even sellers right now know that home prices are inflated. So I believe there's actually some sellers that are afraid to sell because they don't have anywhere to live. So I think as we start seeing more and more inventory come to the market, there's going to be a surge of listings, right? Sellers want to know that they're safe to purchase another house. And again, I think that's why the 13% drop in sales. But again, I see that fear of missing out actually shifting to the sellers. So I think that we're going to have a massive equity surge this year, and it's going to be compounded by the fear of missing out. Only time will tell. Let's finish out this article right now. Take a look at this as well, you guys. Seasonally adjusted new listings down 6% from 2021. So we're down right here, you guys, for new listings. And again, I told you why I thought that was interest rates and home prices, but have no fear. As we go deeper into the spring and deeper into the summer, it's historically the best time for people to start listing the houses. So I am again saying to you guys, as we move forward, we're going to start seeing more and more inventory and less demand. Now, if that's not balanced out, if that's not controlled, we're going to go into a housing market crash. I've told you that. And with the recession around the corner, it's looking more and more likely that that will happen. But do I know for sure? No, I don't know for sure, but all of these signs are certainly pointing to it. Don't you agree? If you guys can, comment right now. Comment right now on your overall opinion of this article, on your overall opinion of the demand, of the supply, and tell me what you guys think is going to happen in the housing market moving forward into 2022. Because again, I'm saying if you're a buyer sitting on the sidelines from here on out, things will get better. Although it's going to lag behind high demand areas and high migration areas like where I live, nevertheless, good things are coming down the pipeline. So again, pat yourself on the back if you're holding out. Now, if you're renting right now and you're just frustrated, you don't know what to do, build your credit, have stronger credit worthiness, save more money, get out of consumer debt, love your life, re-budget. There are so many things you guys can be doing. But one thing I don't want you to do is be crippled by fear of missing out, because everyone that is holding right now, in my opinion, is doing the right thing. And if you're out there bidding and you keep getting your offers denied, good thing you are, because you may be dodging a bullet. As always, you guys, that's my opinion. But thank you for watching this video. I'm going to conclude this video right now. Again, thank you for taking this journey with me. And as always, guys, I definitely appreciate you. If you're out there investing in real estate, I wish you luck and I hope you win.